Here is another daily booster for your conversations. How did your investments perform in the last 10 years? In today's video, we are going to review the last decade of investing. Which investment would have returned me the most money in the past 10 years? Now, whether you're a seasoned investor or just someone curious about the markets, this video will bring insights into how different investments have performed over the last decade. So, if you're looking for ways to grow your money, make sure to hit that like button, subscribe, and let's dive right in. First, let's take a quick look at some of the major investment options we're comparing today. Stocks, S&P 500 pass. Bonds, real estate, cryptocurrencies, gold, and mutual funds. Each of these categories has its own unique risk, return potential, and market behavior. But the real question is, over the past decade, which one has given the highest returns? Let's start with the stock market. Specifically, the S&P 500, a great benchmark for the overall stock market. Over the past 10 years, the S&P 500 has delivered an impressive annualized return of around 10 to 12%, depending on market conditions. While there have been some ups and downs, like the market dips in 2020 due to the pandemic, the long-term trend has been upward. That means if you had invested $10,000 in an S&P 500 index fund 10 years ago, you could be looking at roughly $30,000 today. Next up, bonds. Typically, bonds are considered a safer, more stable investment. However, in the last decade, they haven't delivered the same kind of returns as stocks. Let's say you invested in a traditional 10-year US Treasury bond. The average return over the last decade has been about 2 to 3%. So, if you invested $10,000 in bonds 10 years ago, you'd be looking at something closer to $12,000 now. Not bad, but definitely not nearly as impressive as stocks. What about real estate? Well, the real estate market has seen significant growth in the past 10 years, especially in hot cities across the globe. On average, real estate in the US has appreciated about 6 to 8% annually. So, if you bought a property worth $200,000 10 years ago, it could be worth $400,000 now, depending on the market. However, calculating the real rate of return for a real estate could be much higher or lower depending on how much you leverage borrow and what the borrowing cost is, i.e., interest rate. For example, if you make a down payment of $200,000, but you get a mortgage of $800,000 for a $1 million property, you are gaining 6 to 8% annually on $1 million, not $200,000. But it gets complicated when you factor in cost of borrowing. You may also be able to generate additional income from renting the property out to someone. Real estate has also provided the added benefit of rental income, which further boosts returns, especially if you bought rental properties. But it's important to note, real estate requires more capital upfront and can be less liquid than stocks or bonds. If you would like to learn more about how borrowing impacts investing in real estate, please leave a comment below and we will make a video about it too. Let's talk about something that has become a huge buzzword in the last decade: cryptocurrencies. Bitcoin, Ethereum, and other altcoins have been on an absolute roller coaster. If you had invested in Bitcoin back in 2013, when the price was under $1,000, your investment would have skyrocketed. Bitcoin reached over $60,000 in 2021. That's an insane return, potentially growing your $10,000 investment to over $600,000 in just a few years. Just in case you may be wondering, Bitcoin touched above $100,000 for the first time in December 2024. We left a link to the video about whether Bitcoin will reach $1 million or $0 in the future. So please don't forget to watch to learn about what the experts are saying about Bitcoin's future. But with these kinds of gains come massive volatility. Cryptos can experience huge swings in value, and they're not for the faint of heart. They've also faced regulatory challenges, which can cause major price fluctuations. Now, let's look at a traditional safe haven: gold. Over the past decade, gold has had its ups and downs, but it has generally grown at a rate of about 3 to 5% annually. Gold reached new highs during times of economic uncertainty, but it didn't come close to matching the gains from stocks or cryptocurrencies. If you invested $10,000 in gold 10 years ago, it would likely be worth around $15,000 today. Lastly, let's consider mutual funds and ETFs. Many of these track the stock market and deliver similar returns to the S&P 500. Some may focus on specific sectors or international markets. If you had invested in a well-diversified mutual fund or ETF that tracked the S&P 500, you'd have returns similar to those of the index itself, so we're looking at that 10 to 12% annual return again. So what's the takeaway? Let's break down the numbers. Here's how these investments stack up for $10,000 invested in 2013 for 10 years. S&P 500, $30,000. Bonds, $12,000. Real estate, $20,000 to $30,000, depending on market. Cryptocurrencies is $600,000 with Bitcoin. Gold, $15,000. As you can see, cryptocurrencies are the clear winner when it comes to returns, but, of course, they come with extreme volatility and risk. The stock market, especially the S&P 500, also offers solid returns, and real estate has performed well, depending on the location. Remember, past performance isn't always a predictor of future results, and the best investment for you will depend on your goals, risk tolerance, and time horizon. It's important to diversify and not put all your eggs in one basket. So what do you think? Which investment would you have chosen in the last 10 years? Or should we ask, which investment should we choose for the next 10 years? Drop your thoughts in the comments below. I'd love to hear from you. Don't forget to like and subscribe for Daily Booster for your everyday conversations. And I'll see you in the next video. Until then, happy investing!